Good morning, everybody. How are you all doing today? It's 1 p.m. here in Rome, Italy, November the 22nd, and let's get it on with our daily TA, guys. So, how's everybody been doing so far? Leave your comments below. I want to know how you guys are handling this bearish market. And I need you guys to know that I bet a lot of you guys were brought into this game because you heard of last year's bull run, right? And you were never in a really bad bearish market like this before, where we're seeing sell-offs in the thousands in a few short days only, right? So just always know that whenever you can handle a bearish market and you didn't get liquidated and you didn't lose a tremendous amount of money and you came out still fairly level-headed and still pretty optimistic and you gained a lot of valuable experiences, know that you guys are doing something fairly well in this market, okay? Man, I've been there, guys. Like, that's why I'm also taking a lot of time off right now, because this market doesn't interest me too much until it hits a specific price point. And then we're just going to enjoy the vacations and we're just going to go long on some bigger positions. Like I always say, we should never focus on trying to chase the trade. We should wait till the trades actually come to us. Last thing you want to do is try to force these trades that may not necessarily happen. And I think that before, I was a very successful swing trader, but day trading, it more so suits my style, right? That's why I preferred it a lot more. But just generally speaking, when you're a swing trader, you got to add size to your position, right? Especially if you're fairly confident with it. And if you swing, it actually frees up a lot of time as well. You can enjoy other things in life. You can focus on other things other than monitoring the computer all the time, right? It doesn't mean that swing trading is more profitable than day trading or the other way around. It just simply means that there's different styles for other people. So let's take a look at this, guys. But before we get into the daily charts, let's take a look at it on a very high time frame. I'm not going to keep you guys too long whatsoever, okay? So I want to make note that on the monthly chart, okay? On the monthly chart, we're definitely downtrending, guys. There's absolutely no sign whatsoever yet of a momentum rollover to the positive side on the bullish level. We're still down ticking, right? So if you guys notice, for example, right here, this was clearly a good time to sell, right? When there's a histogram tick over, some people even wait for a confirmation right here as well for the MACD crossover. So when I'm referring to the histogram crossover, I'm referring to the histogram crossing over to the negative side, which is indicative of the MACD moving averages moving lower, right? So here you're getting the slow moving average, there's the 12 moving average, and there's the 26 moving average. When these cross over, that is where the histogram ticks over to the negative side. But what I look for as well to get an earlier reaction in the market weeks ahead is I look for the downticking of the histogram, right? So if you see this downticking of the histogram, that is where you can just tell based on price action that there was going to be a reaction in the market for the bears to move over or to take over. So if we take a look on the histogram here, just as the example, we don't see it rolling over anytime soon, right? We don't have any confirmation whatsoever quite yet. So just looking at it on the monthly, we can easily deduce that we have broken below the 21 exponential moving average. I use the Fibonacci sequence of numbers, the 8, the 13, the 21, and the 55, and the 200 as well. So we see that for the first time in history, since like 2014 or so, we've actually broken to the downside below the 21 moving average, and I can almost guarantee that next month we're going to close below it unless we shoot back up to the 6K ranges, which is not going to happen. So a really good place of support, in my opinion, is always moving averages, right? So just generally speaking, if we do trend down lower, a very strong mode of support would be around the 55 moving average, right? So wherever that may be, definitely above 4K in my opinion. You know, we predicted about 4,900. That didn't play out. So I hope you guys know that it's very important to stick to your stop loss, guys. A stop loss is the main way to manage risk, right? You got to make sure you preserve your capital before you can grow it, as I always say. If you guys are not sticking to your stop losses and protecting your most valuable asset, which is your capital, well, how can you actually focus on growing it? So let's take a look at the weekly chart now to see how this is trending on an overall higher time frame. On the weekly chart right now, we are absolutely going to get a reaction of some sort in the market, in my personal opinion, because we're now at the 200 moving average, okay? The 200 moving average is an extremely strong number, okay? Think of this as a T-line support. Let me draw it out for you guys, okay? Think of this right here as a T-line support, as in we do something like that, right? You guys know what I'm talking about? Where it's just moving over to the horizontal side like that, okay? So I personally believe that we're going to get a reaction, whether it be a small one or perhaps even a rally to 5,400. There will be some sort of reaction in the market. Just because we are in a bearish market, it doesn't mean that these markets, excuse me, won't move up or down. And guys, don't mind my scarf on my head. I don't have any hair product yet. They confiscated at the airport like they always do because they think I'm a terrorist. Just kidding, guys. I'm an Asian ninja, as you can't tell, right? As you can tell. So yeah, I'm just using a scarf for now until I actually make it to the pharmacy so I can pick up some hair product. So anyways, I do believe on the weekly chart we're going to get a bounce off of this 200 moving average, perhaps ever so slight, but unfortunately I'm still incredibly bearish. We're ticking down to the lower side right here, but what would be incredibly ideal is if this histogram right here did not end up ticking down lower than in April levels or in actually the June levels as well for last year, right? Or sorry, for earlier this year. It would be amazing if we got a higher histogram tick, like still to the negative side, but to not as low as we saw it in April and June, July here, because then that would imply that, hey, we're actually going to gain some steam. So overall, we're still trending well below the 55 EMA on the weekly. Let's take a look at a 2-day chart and see how this bad boy is doing. On the 2-day chart, we saw some massive volume coming down here, and you know we got about 13 hours till the daily closes. So because we've got about 13 hours till the daily closes, this could turn into a doji candle, and then we can get sideways motion for a few weeks before we bounce off of that weekly chart's 200 moving average, right? Let's take a look at the daily chart, and what we see is almost a tweezer pair combo that could happen. So what we see, in my personal opinion, is that the volume is so weak. We have to question the bull's motives and bear's pressure to drive down the price right now, right? We gotta wonder, why is the volume actually not picking up despite us trading in the lower range? Because it's not trading the lower range, there's just, you know, we're not gonna get a a V-shaped correction. This is, for example, a V-shaped correction, right? So think of corrections like this that can happen to the upside, or excuse me, when a rally can start, right? We can get a sharp sell-off and then a V-shaped correction where we just end up parabolically moving upwards, right? Something like that. Or we can get perhaps a sell-off, right? And then we lull for a bit, sideways, accumulation, and then we end up going upwards like that. So what we see here, for example, is a huge V-shaped correction. Huge V-shaped correction here as well, right? A huge V-shaped correction, huge V-shaped correction. I feel like I'm Donald Trump right now, just saying this thing is going to be huge. So we take a look at here, for example, this is more of a sideways accumulation period before we actually ended up going upwards, right? Sideways, here's sideways as well for a few days before we ended up uptrending. So let's take a look at the 12-hour chart as well to see how this guy is trending. So we're seeing the volume just slowly decline, right? So we also have to consider it from the perspective of the bears. Are the bears just done applying pressure and it simply can't go down anymore and there's no more sell-offs? Or are the bulls simply incapable of driving up the price because they're too fearful of accumulating? So there's massive types of bearish pressure in my opinion here. So optimistically, guys, I'm going to take my fib retracement of just this structure right here because I believe that we could still get a retracement, guys, up to the $5,100 level, which would be incredibly ideal. Now, I gotta take off really soon, okay, guys, because it's gonna be a day of exploring here in Rome. So let's take a look right here, right? Here didn't even hold whatsoever, completely broke through. So 4,800 is going to be quite a point of resistance right now, okay, if we end up breaking to the upside. Not only that, like this whole region right here, in my opinion, is going to be some sort of resistance level, specifically a dead cat bounce at the 5193 region, right? But if that actually ends up breaking above it, I'm going to see some really bullish pressure to even the golden ratio ranges, okay? That would be super ideal if we can get to the 0.5 to the golden ratio ranges, right? But if we don't, guys, unfortunately, we're just going to trend lower, right? 3,000 is obviously the worst case scenario, but we also got to consider some psychological points as well at 4,000. It seems every 1,000 is going to be a major pivot point. 5,000 was not even close to one, but I think now that we've broken below the 5,000 range, 4,000 will absolutely be the next pivotal point, considering the incremental movements down to 500 right now. 4,500 is obviously acting as some sort of support. So hopefully we don't get to those lower ranges, right? But obviously, if we do break these lower ranges, I think that a really good risk to reward. I'm sorry to tell you guys this, you don't want to hear it, but unfortunately I'm going to tell you it right here. This short position, if it gets broken down, whatever price that is on Bitfinex here at 43.03, you know, I would set my stop loss at around 4,400. I'd set 4,400, and then I would go to about 4,000 as my target right there, and I'm yielding myself a pretty beautiful risk to reward ratio of about 7 to 5. That's kind of crazy when you think about it, right? 7 to 5, guys. Like, think about that for a second. 3. I'm gonna backtrack for a minute. I'm gonna put my foot in my mouth, and I'm gonna try that again. So give me a moment, okay? There we go. We got a risk to reward ratio of 3 to 1, which is phenomenal, right? So the risk to reward ratio is calculated by your stop loss in a short position minus your entry price divided by your entry price minus your target price, okay? And when we say something like a risk to reward ratio of 2, okay, I'm going to give you guys the simplest explanation that you may not have heard in a while. I'm going to give you guys something like a flip a coin scenario, okay? Let's talk about this for a moment of flipping a coin, and we're just going to talk about the potential with probability as well over a period of time, okay? We're going to use a quick flip a coin scenario for you guys with a risk, that's hard to say, with a risk to reward ratio of 2 to 1. RR 2 to 1, okay? We're going to flip a coin and we're going to wager or bet $1,000 each time, okay? And we're going to assume a win rate of 50%, okay? And we're going to assume a loss rate of 50% as well, right? And over 10 possible games, okay? Now, if we won 50% at, you know, $1,000 game, right? Does that make sense? So you win 50% of the time over 10 games is equal to, okay, is equal to $1,000. And we'll say here we get a risk to reward ratio of what, guys? Okay, let's just figure this out together here. We get a risk to reward ratio here of we'll just say, to make it simple, 2% gain per trade, okay? 2% profit per trade. We're just keeping the simplest possible terms, okay? Now, if we $1,000 times 0.02% is equal to $20 per win. We're just gonna give you an example like that, okay? So over 10 wins is equal to $200 of profit, right? Now the loss, 50% of the time over 10 games is equal to $1,000 times 0.0. Actually, the loss here would be 2 to 1, right? So if we're winning 2%, that means that we would be losing 1%, right? Because that's what the RR ratio refers to. It means that you can win 2 times more than you can actually lose. So then you would lose $10, right, per loss. Over 10 losses is equal to 100, right? So we're talking about the period of over 10 games, right? We're just using 2% as an example as well. So then your net profit would be your total wins minus your total loss, right? So then over 10 games, if you were to treat it like a casino, you'd be profiting $200 minus $100 is equal to $100 net profit over 10 games. So it's just to give you guys a really quick example of how we treat RR and how we try to see this as a casino and winning over time. So in my opinion, that's probably going to be my plan, guys. Absolutely. But my ideal scenario would honestly be to short it right around the 382 Fibonacci region, around 5100. And then I would set my stop loss, honestly, for a pretty high R unit that I would be targeting, guys. Like, I'm very, very aggressive sometimes in bear markets, and I would be targeting something like 4,000. Well, first of all, I would target 4,300 with an RR of 3.29. And the reason why I do that is because I'll be taking small profits laddering down, right? And then if we actually break it with conviction, then I'm going to add more to my position. But it's just like taking profit on an uptrend. You don't want to take the profit, right? When it's just starting to roll over and you've confirmed the downtrend, you want to take profit, in my opinion, when the market is still incredibly strong, and you want to ladder those positions to maximize your profit and to minimize your bottom line expenses, just like for shorting, right? So this is my absolute opinion that I think we're going to get up to 5,200. very, very, very bearish in my opinion still. So let's also do a MACD and a histogram analysis, okay? We see the MACD just crossing over right here, as you guys can see, right? Absolutely. We see the MACD crossing over on the 5-hour chart right here. We do see a higher histogram tick than the lower interim short region over here, right? Or the lower short-term region. This is the higher histogram tick. Let's see how high this histogram is going to go. I don't think we're just going to tick up very, very slightly. We might even get a bigger one. Who knows, guys? There's so much time going on. And you can also see this as a descending triangle even, right? You guys see what I'm talking about right there? Like a descending triangle? So, yeah. This could be an incredibly bearish level, but we also have to keep in mind this as well, that it could be a descending triangle depending on the time frame that we look at, but it could also be a channel depending on the region that you look at as well. So if you're looking, for example, at a 2-hour chart, it could be a channel that's sideways. If you look at a 5-hour chart, it might look like a descending triangle, right? So it's very subjective how we actually draw these trend lines. But I think that the moment we break, for example, let's say we end up breaking 4,800 ranges, no doubt we'll end up getting to the 5,000 ranges again to test up to the 5,193 regions again. So I'm just going to stay tuned, guys. Right now, I've got no idea what my plans are in the market, but what I do know is that I'm going to go to the Coliseum today. I'm going to eat a lot of pizza. I'm probably going to stuff my face with tons of Italian food, really good pasta. And I'm probably going to go to the Vatican City and go to the Pantheon as well. So anyways, wanted to give you guys my quick thoughts that if we break below the 4,300 regions, just to summarize, we are no doubt going to test $4,000. It just makes absolute sense. But if we break above this possible region of 4717, we're going to test up to the 5,000 ranges first. And then if we break that, we'll get to the 5,100 region. But as it stands right now, just based on how the market is looking, I'm incredibly bearish overall. As much as I would love to be bullish, guys, it is not going to happen. But one possible and positive and optimistic news is that if we do see these sell-offs happen in November, there might be a chance, just might be a chance for us to actually have a bullish December. And guys, we're going to make it rain. We're all going to make some pretty decent profit because let's face it, anybody can look like a genius in a bull market, right? And if we have a bull market, Christmas is going to come early. Simple as that, guys. So anyways, thank you very much for watching me. And thank you once again for all the love and the support you've given me. I want to send you guys my love and appreciation from here in Rome, Italy. So have yourselves a great day. Make sure you guys are clicking on the notification button on YouTube and on Twitter to make sure that you're always getting my updates in a real-time manner. And make sure you guys are liking all my content and sharing it as well. So have yourselves a great day, guys, and I'll see you later tonight. Bye now.